What's good, YouTube? My name is Makubo Steez. This video is about how to draw a Fibonacci. So before getting to how to draw a Fibonacci, I want to lay out some basics first. What are those basics? Market structure, guys. Like for example, let's say you're going to, I'm living in South Africa by the way, maybe let's say you're going to America, for example. So in order to know how the America operates, you should know the streets of the America, right? You should know how we like get to the shop, how we like get to certain places. You get what I'm saying? So the same applies to trading. If you want to know about how Fibonacci works, or how supply demands works, or how certain elements work in trading, you need to know about the market structure, right? So I'm gonna show you how Fibonacci works, but before getting to that, Fibonacci only works in the trending markets, because in any other market that is tradable, we have three phases of a market structure. The first one is actually we have two, but it's three, because we have a downtrend, a sideways market, and an uptrend. So when I say it's two, I mean we have sideways and a trending market. It's two, besides including downtrend and uptrend. But let me not confuse you guys. We have three, which is downtrend, sideways, and uptrend, right? So I'm gonna show you a downtrend, and actually I'm gonna show the whole structure. So this is the structure of the market. Here we have what? Here is sideways, where you can place your Fibonacci. This one is a sideways market. Here you can't place your Fibonacci where in a sideways market. You get what I'm saying? So you can only place a Fibonacci where in a trending market. So how do you know that the market is trending? First, you're gonna have what? A low. Second, you're gonna have what? A lower high. Lower low, lower high. Right? Here you're gonna have what? A high, a higher low. Higher high, and a higher low. Higher high, higher low. You understand? So this one is a trending market. Even this one is a trending market. That's where you can place what? You can place your Fibonacci, but here you can't place your Fibonacci. So how do you know that a trend is in motion? Is when you have lower highs and lower lows, lower lows, lower high, high, higher low, higher high, higher low, higher high, higher low. That's when you know, okay, now I have what? I have a trend in motion. So let's get into the chart. Actually, let me show you how to implement a Fibonacci. Let me show you how to implement it before we get into the chart. So here's a Fibonacci, right? So when we are in a downtrend, you start drawing your Fibonacci from the highest high to the lowest low. When you're in a downtrend, you start drawing your Fibonacci from what? A highest high to a lowest low, right? So for example, let's say we have what? You have a trend in motion, then we have a retracement here, then you have a trend again in motion. So this one is lower low, lower low, lower high. So how to draw a trend line? I mean your Fibonacci from here to here on a downtrend, right? Then you know that okay, along 0.5 or 0.61%, that's where I'm gonna get my retracement, and that's where is the beginning of a trend. Get what I'm saying? Vice versa for what? For an uptrend. Right? Fibonacci is simply a tool to show you where a trend will begin, because you can't buy on a retracement or sell on a retracement. The market will keep hitting a stop loss, and you'll wonder why, because you are selling on a retracement or you are buying on a retracement. So that's how we draw a retracement, guys. These areas I'm gonna get into an advanced part. So this area, this ratio, this one are areas of retracement. Then this one are areas where you can draw your swing high and your swing lows. These areas, this is 1, this is 0. You see, I started from 1, that's where the trend has started. Then I went to 0, that's where the trend has ended. Then it started to retrace and came to what? It came to 0.5 ratio. Okay, you get what I'm saying? Then the trend started to resume. Then the trend started to what? Started to resume. Right? The very same way in this, the trend started from 1 and it ended where? It ended in 0. Then it gets to 0.5% and the trend continues. You get what I'm saying? So these areas are areas of retracement. So here's the advanced part. How will I know that the price will turn there? How will I know that price will turn there? Guys, this is the advanced part. Let's get right into it. Let's get right into it. So I will show you what do I mean. How will I know that the price will turn there? So here we have boom. Today I just simply chose a binary so that we can implement this thing, because it also works in forex. Like anything that is tradable, this thing work. You get what I'm saying? So here we have what? We have a swing high, we have a swing low. So when we have this, we know that okay, now it's time to draw my Fibonacci, right? Then we start from a swing high to a swing low. So here's the biggest question: how will I know that price will turn here? How will I know that price will turn here? Right? How will you know? How will you know? Here's the answer. When you are drawing a Fibonacci, you should always look for an order block, right? A bearish order block is the last bearish, is the last bullish candle before the bearish movement. That's a bearish order block. Then a bullish order block is the last bearish candle before the bullish movement. Bearish order block is the last bullish candle before the bearish movement that break the market structure, but that one is a topic of another day. I just want you to understand what is a bullish candle. I mean an order block. Sorry guys, an order block. An order block is the last bullish candle before the bearish movement. So how will you know that price will turn? Because you know that okay, in 0.61% there's a bullish candle, and I'm in a downtrend. Okay, then this one is a high probability. This one is a high probability. When price get there again, I'm gonna sell and go in the anticipated direction, and go with it in the anticipated direction. So let me show you another last example. So I don't want to make this a long video. So let's get to the trade I took today. Here's a trade I took today. Hey, it's playing out nice. Remember, I've showed you a bearish scenario. Now I'm showing you a bullish scenario. So here, in order to do your VIP retracement, you need what? You need the swing low. You need what again? The swing high. Right. So after getting those 2 points, go and fetch your. Okay, let me draw it again. I feel like I didn't hold it the way I was supposed to hold it. Yes. You go and drag your Fibonacci, guys. So how will you know that the price will turn where it's supposed to turn? Because of what? Of an order block, guys. Because of what? An order block. Because of this order block. So now you know, okay, if I want to enter a 0.10, a 0.20 on $100 account, you see, or I want to go in full margin, that's no okay. I have what? I have 1, 2, 3. Because you know, trading is a game of probabilities. You need at least 3 things or 4 things in order to sell or to buy. So here you have 1, 2, 3. You can buy. Say when price hit this order block, then you can buy and put your target here on the sorry, and put your target here on the last swing high. That's where you put your target. So guys, I hope you find this video insightful. Like, subscribe and share so I can grow as well as a person. Thank you guys.